Today's fall of 3.8% was the biggest in one day since March 2020 and removes most of the gains that have happened this year so far. The banks are all down well over 4%, CBA 5.7%, technology stocks likewise, retailers as well. But what's going on in Japan today is even more worrying. Its share market is down 12% today, on which more later. The US market fell 1.5% on Friday and the Nasdaq 2.4%, but after the action in Tokyo, there's a lot of concern about what happens in New York tonight. Now, the immediate cause of today's fall was news on Friday that US unemployment had risen to 4.3%, triggering the recession definition based on a 0.5% rise in unemployment in 12 months. So it looks like a recession is already underway in America, or soon will be. The hype around American tech stocks began to break 3 weeks ago, and they've been falling ever since then, with the Nasdaq down more than 10%. Hot AI stocks like Nvidia have dropped 20%, so it looks like this tech bubble has finally burst, raising the question of whether it's March 2000 again, when the dot-com bubble burst and the Nasdaq fell 77%. Now, I don't know about that, but the market is expecting a 0.5% rate cut in the US next month and a total of 10 cuts by the end of next year, which is what happens in a bust. Today's huge fall in Tokyo was prompted by the Bank of Japan actually hiking interest rates last week to defend the tumbling yen. But the index there has also been falling for 3 weeks, and after today's horror is now down 25%. Every global recession for decades has been preceded by an increase in Japanese interest rates, and while that's probably correlation rather than causation, it doesn't really matter. Global recession is now on the agenda as the rate hikes that have been squeezing economies everywhere except Japan until now do their work. Oil has dropped 4.5% and Bitcoin 17%. And the Aussie dollar fell below 65 US cents for the first time since Anzac Day. And that's finance.